contacts. If you go in my Discord room, you'll see me post some things across there and different reports. It's not as sexy as the NASDAQ and the Dow and the S&P, but it is something that it's not the easiest of day trades of what we do, but if I do see opportunities, I take them. But if we're going to talk a little bit about yeah, so my chart's up there now. So, and I've kind of got some unique ones here a little bit. I think what I'll do is there's some regulars here, but for some new people, I'll kind of show some pics and talk a little bit real quick about basically what the floor was like, because I'm going to share a floor. Probably he was the biggest S&P trader on the floor pretty much for a good chunk of the 80s and 90s, and then he left the floor in 2000. There's a lot of stuff. I'll share a link on him. And I'm also going to share some information that I didn't realize, because when you go down the YouTube wormhole, what you start to learn about some other people out there, and that's a movie star that talks about how trading was a second part of his life besides being a movie star. So I'll share a little bit about that, but I think the easiest thing for me first always is I'm going to share just a basic little intro for any of you who haven't seen this. Is let me pull this up real quick. This is basically what the flora looks like when it was empty. Hold on, let me change screens. Why that screen is not sharing today. This is basically what the floor looked like with nobody on it. You've seen that before. I asked traders if they know what that clicking sound is. Does anybody remember what I said that is? Aliens? No. That's basically, those are time clocks. So basically, all the orders that come from the desk to the pit had to be time stamped. So basically, if you ever worked a job where you punched a clock, that's what you hear clicking on the floor. But I'm going to share a little piece of who we're going to talk a little bit, one of the persons we're going to talk about today. Let's go share this one first.
You go through the turnstiles, and there's 6 banks of doors, and they were like tinted doors. And you open the door, and you just it just hits you. The noise, the clicking, the screaming, the energy, just everything just hit me all at once.
This is Tim Hendricks. He's in his 50s now. He destroyed his vocal cords years ago, as tends to happen when you make your living shouting on the floor of the Chicago Mercantile Exchange.
I was overwhelmed, just like, and my first thought was, what did I get myself into? It's like nothing I had ever seen before in my life.
It is the most intimidating fucking arena you could ever walk into in your life.
That's Stretch, Tim's best friend. In the 80s, Stretch worked on Chicago's other famous trading floor, the Chicago Board of Trade.
It was like this crescendo of just fucking energy and people and fucking madness, and just you cannot fucking describe it. So if you're new and that's your first day, you're literally gonna shit in your fucking pants the second you walk onto the floor like that.
Got a very Chicago vernacular to this.
Organized chaos that I wanted to be a part of. I was like, I might be over my head, but this is going to be unbelievable. I just couldn't wait to get started.
Sounds exciting, sure, but what the heck did Tim and Stretch actually do at these exchanges?
Trade in wheat, corn, oats, soybeans, T-bonds, silver, gold, and more. At the Merc, we trade futures on cattle, hogs, pork bellies, lumber, foreign currency, interest rates, and stocks.
Don't worry if that all sounds confusing, because it is. And we'll learn a lot about these exchanges over the course of this season. For now, though, understanding how they traded those products is more important. The process was called Open Outcry.
So this is basically more of what Open Outcry looked like.
You go through the turnstiles.
So this is what you guys heard on the floor, was that guy right there. Bunch of those all over the floor. Those were basically the timestamp machines. So when we talk about trader journeys, and whether it's the electronic world or the conversion from the pit, I wanted to share a little bit with guys that I had actually traded with. Not necessarily buddies of mine, but guys I traded with. And just kind of give you their thoughts on the journeys that you guys are going through. I'm going to share a journey, like I said, from the largest trader in the S&Ps at the time, and a little bit of his journeys. And I just think it helps us all understand how difficult and how long this journey can be. So let me put this one up, which I think is a really good one.
There's
get to all of them. We only got a few minutes left. You guys are gracious with your time. We're going to run a little long today because I want to make sure I get to some of them. Greg Donahue. Greg, thank you for the question. He said, good afternoon, everyone. Thanks for doing this. Got a question. Do you think the learning curve for traders today is shorter or longer than it was in the pits? And we'll go around the horn, and we're going to try to make them relatively quick with the answers here. We'll start with you again, Pax. I know.
You guys want to guess? Pit guys are going to say about this? Let's listen in. So what you see here, this guy right here, huge, was a hog trader when I was there, but actually before the NASDAQ really became what the NASDAQ is, he was probably one of the largest traders in the NASDAQ. This guy here traded in the S&P pit. And this guy actually was on the floor, but was in the conversion of electronic to that. So listen a little bit about, I think it's interesting to hear other pit traders talk about what they think about the migration to screen.
Oh, Mr. Sensitive.
Oh, thanks. I think that, and this is from my own experience, I think it's longer. I think the learning curve now for a trader is longer. I think it's easier to break into the business, but I think it takes a longer period of time to learn how to not lose money, to learn how to break even, and then after you learn how to break even, to learn how to be profitable. So I think the learning curve is actually longer. But I think that the amount of money that you need to spend in order to learn how to do that is a lot more limited than what we had to on the floor.
Earl.
I would agree totally with Pax. I think it's a lot longer now. It was much harder to get in the business, but once you were there, you had the advantage. How I learned how to trade is I was dumb enough to know better and smart enough to say, hey, who's the best trader? You brought him up earlier. You'd ask 4 or 5 people and get consensus. The advantage that you had in the pit,
Right.
there was no little league. You were instantly there in the majors. So you learned right away to keep your mouth shut. But the advantage I had is I said, who's the best traders? And they gave me 3 guys. And the guy I watched that was easiest was Praz. Every time he put his hands up, I put my hands up too. I didn't know what I was doing, but if he was even bid on 100, I was even bid on 1, and that's what we did. I think it's a longer learning curve now. I think if the structure was different, you could get in and sit next to somebody, it would probably be similar. But I think it's also a lot easier to get into the business now. I would agree with Pax totally.
Morad.
I was never in the pit trading, but I was there watching these guys trade, you guys. And I got to say, having dealt with a lot of people trying to trade electronically, it's definitely a lot longer. And one advantage I had trading in a prop shop or with a group, these guys, Pax and Earl and you are accountable to someone. The biggest problem that exists today for online traders is that you could just BS your way out of every stupid thing you do on the screen. There's no accountability.
Yep.
There's just no accountability to open a micros account and trading it and doing silly things and scalping in the middle of the day. Back then, you're trading someone else's money. Earl had 10 grand, Pax, I don't know how much it was, but you had to answer to somebody. You borrowed the money like you did, Anthony, you had to answer to somebody, you had to perform. Now it's just like kind of like a video game. People take it as a video game, but you'll lose your money. And I think that's what makes it long. Also, you couldn't look around. There are many, many advantages to being in a pit. You could hear it, like you guys say, you could hear how loud it got, and it got your attention. Now you're kind of in a vacuum. You're watching ticks on a screen. And it makes it harder. So I always tell people, try to find an accountability partner. Try not to trade on your own. That's a very, very important piece.
For me, I'll keep it real short and sweet and simple. I think the biggest reason why I agree with you guys and why it's longer now is because of the mindset of people nowadays. Everybody wants everything today. Nobody wants to plan for a longer term commitment to anything. And when you open up a trading account, you think that instantly makes you a trader. But it doesn't. It takes a long time. It's a lifetime commitment. So that's why I think it takes longer, because it really should be a lot shorter. This is a question that we answered. I'm just going to talk about it real quick. Is did you all have to find a new style going from pit to screen? I'm sure you all just traded price movement in the pit. How do you trade in the screen the same way, or was there a major adjustment? We'll just go to Pax and Earl here. I think you guys answered this, but if you want to just maybe comment on it real quick. Pax?
I trade much the same way that I did when I was at my best on the floor. I trade from the opening range every morning, and I trade from that to targets. In the S&P 4187 above to 4220 to 4265 to 4292. So if I'm long from the opening range, that's why I'm taking profit at. I'm not going to trade anywhere other than those prices, period. And if I find myself trading anywhere between the opening range and 4187 or 4220 or 4265, I know I'm losing money. And so that's, I don't trade in the middle. I don't mess around with it. So, one of the major things one of the major components for my success in my career is sticking to my process and not veering from it. But my process is not effective in every market 100% of the times, but I do know it, and I know that it's going to always protect me, and it will give me some of the upside that the market has for me. So I don't know if that answers it or not. I think I got a little off base, but I don't worry about time. I don't worry about volume. I just trade price.
Earl.
Yeah, the quick answer is, yeah, you had to train your style a little. One of the cues and the things that we did fluidly in the pit is you would just spread out your bid and ask you were more flexible to the activity in the pit. You weren't always as tight. If you were even bid at a half when it was slow, you were even bid at 1 even or even bid at 2 even, if the market opened up. And if it got really crazy, like on a flash crash day, you're even bid at 20, you'd open those markets up. I think it's easy to get static if you're not careful on a screen. You need to adjust to the volatility. If you have something that works in the morning for an hour, it probably won't work at noon. But you do have the ability to switch that. So that's probably the biggest thing.
Last question for today.
So I want to talk about a couple of those items right there. And I think as traders, you guys hear this a lot. For any of you, and once again, I assume a good chunk of you watch Top Step TV and hear a lot of these things like process over profit for any of you that do. But it's interesting to hear, I think, and this is why I share this with you guys and talk about it, is even hearing seasoned traders from the pit who have had to convert to screen and have went through a huge change of stimulus to where it is now. One of the things that I want to kind of talk about is understanding how long this journey can be. You guys need to understand that. And B is understanding market state and understanding, like what Earl had said, what happens at 9 or 10 o'clock might not be the same thing that happens at 12, 1 o'clock. So, and the other thing too, guys, is trading alone. The huge vehicle of trading with other traders through chats and streams, whether it be a guy like Rips or whoever, if you're not on Top Step TV chatting or kind of in that or going into like a Discord like you are now, trying to do it on your own is rough. In the pit, you kind of got thrown into the water and you had to figure it out. But most of the time, like I said, somebody got you in there, so somebody kind of had your back a little bit at the start. But I just think bringing those things to the forefront and understanding a little bit of, because I see a lot of traders ask if they should do it full time. I want to do it full time. I think if you realize if you can do it part-time and make a couple good trades in a day, you don't need to, that was probably one of my biggest ones, was over trading and feeling I had to be in every trade or I was going to miss out on something if I wasn't in front of the screen. You can make 3-4 good trades in a day and be done. That's the freedom of the industry of trading. So having a discipline to even, to shut that screen off and move away. Like I shared it in Discord today. I mean, I lost a couple XFAs and just like you guys, I have to go through a combine, and I had a combine this morning. And I shared it in the coach's room. I had to make like $300 to pass 150K combine. I did, and that was trade of other accounts, but that was my day. And I locked it out. I wasn't going to keep trading. I passed the combine. I'm not going to keep rolling, through that dice. So. But those are some things that I think you guys need to hear outside of the world of sometimes Top Step, because I think some people feel like it's somebody trying to push you into something that they do or other style, but we're just trying, all I try and do is give you, call it, hours of screen, hours in the pits, working in back offices, doing out trades and just understanding kind of order flow worked and all that. It's just kind of trying to speed your guys' learning curve up is kind of what I feel like mine is. And then, like I said, I share a little bit of my style is unique, you know. So the first guy I want to talk about, and this Dan kind of, I knew him on the floor, wasn't a buddy with him. I'm sure Hoag's probably got more stories. I will share. I did find one, Dan, that kind of last minute that I kind of pieced together. That's probably the best one I've seen. I'll give you guys the link if you guys want to watch the whole thing. I put some stuff together, but the trader's name, and he's going to share. I'm going to share the short version I have of them first so you guys understand. And I always like to look through some questions on the first break here. Yeah, and once again, I think everybody thinks, Mr. Nowak, it's a point and click world, and I get it, but it wasn't always that way. It's such an efficient animal right now than it was, even 15 years ago. But the cost to do business, as you heard those guys talk about, is significantly less, but the learning curve is more. Just because there's more traders, there's computers, there's algos. This was, if you guys want to see, and once again, like I said, I shared this in my room, but not everybody's there. That's what a typical, if you want to see stats. So this is the combine. It's not updated as of today, but I only had $300, and trust me, it didn't. That's a typical, very typical for me when I pass a combine. My trade winning percentage, I used to try and be a 70-75 guy. I've changed that. I used to be a 1-to-1 guy. I've changed that. And those things have helped me. Length of period of time of a trade. I do, oh, sorry guys. This isn't switching over today and I don't know why. I have to keep cutting out of this stream. Sorry, let me run that back. Usually I can drop and drag those. Thanks, Dan. So this one up there first so you can see that. So that's logistically, that was 336, whatever, $338 to get me to the 159, and I locked that thing up as soon as I passed it, right? So I'm done for the day there. I'm not even putzing around with that. Once I pass, I pass. We talk lengths of trade. If you look at most of my trades that I hold are in the 10 to 30 minute range. You can see that. Sometimes I'm no different than anybody else. If I've got my entry wrong right away, I'll cut and lose it. I don't have a problem with that. But I also do some slow market trades where I'll look for a setup, do a micro and look for it to move overnight. So what I was saying before is, so that's pretty typical for me. Like I said, there's my win percentage. 1.5 as opposed to always being 1-to-1 is what I've really worked on. My average hold time. Yeah, that's kind of more. And how long it takes me. I used to try and see how fast I could pass a combine. I don't do that anymore because that's not going to get you that'll get you that'll get you to an XFA, but that's not going to get you keeping the account. So, so yeah, let's talk about Louis Borsellino. Some old school video. You guys see that? It's January 19th. So that's Louis Borsellino. We're going to get in a little bit about learning about him. Understanding, if you can grab the entire clip and share the link in there. It's just extremely different world than you guys trade in. But I'm going to share this. This is the whole links. His story is about 45 minutes. But I want to share what I've kind of cut up. And I think this is good for you guys because it also gives you some basics to a little bit of what went on in the pits.
Trading S&P contracts, Louis Borsellino, one of the largest players in the S&P pits in Chicago, joins us here in studio. So let's just start with the market. This has been one of the wildest periods in recent memory. What is the message of this market today that you can glean?
From a technical point of view, I think the market looks good. I think it's going to range for the next 2 weeks.
The Nasdaq did not take out maybe $1,000 to get out. $15,000 to get out.
Borsellino's shoulders big risks, shoulder pumps big and
When I was on the floor, I used to call myself the savant, right? Because, you know, I don't think I'm a rocket scientist. But when I was on the floor, I was very good at what I did. I was born on the south side of Chicago. We lived like 103rd and Peoria, which is known as the Roseland District. My dad was a truck driver. My mom just had started working. My dad, he went to Texas. And, you know, he was there for a year and he didn't fit in very well. First of all, he was Italian, you know, and his father basically told him, "You're stupid. How much money you make a play football?"
Oh, yeah, he was so football-oriented. He played at Harrison High. He got a sponsorship to Texas Tech.
So my grandfather had a nervous breakdown, and my dad came back. So I was talking to him about his life, you know, one time, and he was always honest, totally honest guy. He said, you know what? Biggest mistake I ever made, coming back.
So understanding where this journey leads him a little bit, I'm going to move a little bit ahead to the floor so you guys get an idea. One of the things I'll share a little bit later about him is, I'm from Chicago and I'm Italian. So I'm pretty close to about the same age as Lewis here. So there's a reputation of Italians in Chicago that go all the way back for a long period of time. And his father, just to kind of give you a little background, after he came back from Texas Tech, went down the route of being someone who worked for the mob. So if you understand a little bit of the references he starts to give, you'll understand a little bit of what it was like for him when he came to the floor.
He never liked the idea that he had to borrow the money.
So this story is great.
Well, I was working as took to get us back.
Dads. When we were kids, remember where the walkie-talkie came down, Mattel walkie-talkies? And everybody had the Mattel walkie-talkies, right? And you basically go, hey, we can maybe hear like 200 feet away. So I told my dad, I go, Dad, all these kids got, walkie-talkies. He goes, you want walkie-talkies? I go, yeah. The next day he came home, he gave us these walkie-talkies, right? And you could talk, they were from the Army, right? And I'm going, and me and my brother and I could talk to, four suburbs over, right? But, later, you realize that they were the walkie-talkies they used if they were going to, they were going on a score or something.
It was Goodfellas before Goodfellas.
Boat up in Lake Geneva. We had, my mom and him had new cars. He had the house paid off. He always had a lot of cash.
Oh, sorry, guys.
Pockets. In 1962, 63, I went to every home Chicago Blackhawk game. When my dad would go to the game, and play in the stadium, they play hockey, and they would use all the Hawks equipment. Somehow, when my father got in trouble, it was for, they had hijacked a bunch of trucks, the freight off the trucks.
Some of it's a blur to me. I can't remember what sequence it happened, but he did get in trouble when we lived in Lombard.
It was kind of the joke, right? Or, where'd you get that? Oh, it fell off a truck, right? So that was sort of, it was part of our whole childhood, and the people they associated with. They were all truck drivers. And I met a guy named Lou Matta, and he was a trader. And I'm following the market and looking at gold.
Maury was very good at going out and soliciting new business, forming a group, and then basically going out and attempting to gather business and use basically economies of scale to be able to execute that business at a more effective rate. Now, that was very disruptive to the industry. Everyone down on the floor, for the most part, if you were an order filler, you were your own little enterprise. You filled in cattle or hogs or gold or wherever. If you were a local, you moved from pit to pit possibly, but you were your own little enterprise.
So you guys, the reason I wanted you to catch the tail end of that is understanding why I trade the way I do. And I'll share the link here in a sec, which will go through the whole thing. When you guys have seen my sharing, I will have to figure out what that is. I am not doing that today. So you guys have heard me say this, why my style of trading is a little bit different. And that's because I've eventually started to learn that I wasn't going to fight as a screen trader a little bit and just trying to modify it as I went to screen from the floor. So that jacket was my trading jacket from the floor. And that badge, which is gold, allowed you to walk into any pit in the exchange and trade. Okay, so I could trade S&Ps, I could go trade Eurodollars, I could go trade Japanese yen, I could trade cattle, I could trade hogs, I could trade, back then there was the D-Mark, lumber. So I could, this was the most expensive seat to own and to lease, but it allowed you to trade any pit on the floor. So if your pit was slow and you knew some guys in another pit, and they were busier, it gave you the opportunity to go over to other pits and trade. Just like when you get into rollover, like you guys see during equities, that's why saying having a secondary market outside of the equities is good. So sometimes you're not caught up in the chop of rollover when the market gets very rangy and makes price action a little tough to deal with. So this is the other reason that I have this, and I've shared this, of why. First thing is, when you guys see my page every day, you look at this, you see a chart and you see 3 quote boards, because that's what I looked at every day. And I like to see price action and numbers staring me in the face, and not necessarily looking at what you guys do now, is looking at all those bars, whether they're 30-minute, 3-minute, 1-minute, 30-second, depending on what you're trading. It's, once again, I've tried to adapt it to what my style is. And I'm always trying to modify it a little bit to whatever the market state that sits in front of us. Like we talked about this the other day. You see the chart you see there below there is average true range. It's a 30-minute chart. It's the ES. And you can see yesterday, the true range, the market was much more whippy and volatile, and we had much more expansion. Whereas today we had a little bit early and then we kind of flattened out. So I watch that. Just because I've learned, and Coach Paul's helped me with this one, is just trying to be better at managing my risk and where I'm placing stops and things like that. So the other one that I ran across about talking about a journey into trading, which this is a guy who's also right around my age, and we've all seen him in movies and stuff. And you're going to see this guy. I want to make sure this loads up first. This is a famous actor.
were consistently working. I mean, from the time of Goonies up until today, and even No Country for Old Men. I mean, it was film or television. But I gather clearly there was a moment in your life and in your 20s when I imagine you thought this is probably not.
All right. So he said Goonies, and I'll reload the stream, and the stream's not cooperating today, guys. So I have to keep reloading it. Apologies.
Not going to work out. I mean, you left, not left, but you, for time being, you became like a stock trader.
I mean, I had to earn money. I had children. Going to school, and I just wasn't making money, man. I mean, I wasn't, if you're lucky enough to make $100,000 a year, which I wasn't.
Yes,
if you're lucky enough, then you're clearing $30,000 after taxes and commissions, and if you have a lawyer and you have a manager and an agent and all the stuff that I had back then, but it just wasn't cutting it. So, I met a guy, Brett Markinson, on the airplane. We really hit it off. We laughed a lot. And
you can look that name up too.
Traded. It was part of what he did. He was an entrepreneur, but he traded, and he was very disciplined in it. And I was just curious. It was another thing to be curious about. I'm in a profession that works really well for me because I'm an insatiably curious person.
Yes.
So I can delve into these other mentalities or professions or this or that, and then I can leave it. I don't have to do it for my whole life. I'm very lucky in that way. I feel very blessed in that way because I get to touch all these different things. I get to feel like I've lived 50 lives instead of 1 or 2. And Brett Markinson was, I just absolutely, I still adore him to this day. And he was telling me about trading. So he was a guy who loves to talk and loves to teach. And I'm a guy who's not afraid of asking questions, the same question 50 times until I understand. So I went and I got TradeStation, and I had my 3 screens, and I had all my graphs, and I had 4 tabs per screen.
So is any of this, it's crazy, is any of this sounding familiar to any of your guys' journey? I mean, from the guy who, yes, as Dan put in there, is Thanos.
And you look at stochastics, and you look at this type of thing, and I go, I don't know what this means. What does that mean? Support and resistance, and I don't understand. And how does it turn around, and why does it turn around? And all this stuff that's super boring to talk about because nobody's interested in it like I am, And then on top of it, eventually I'm doing Wall Street too, and I'm talking to all these billionaires, and I have all that knowledge. So then I have, this ability to be able to talk to them about finances and discipline and fear and greed and all this kind of stuff. It was an interesting thing for me to get into, and then I ended up, when I was really on it, which I'm not now. I'm a long-term trader now. I don't pretend to day trade, because if you do that, you have to be up at 4:30 every morning, and you have to know your basket, and you have done your due diligence for what you're trading for that day and the night before. But I made more money than I had ever made acting, for sure.
Wow.
By far.
Wow.
And it wasn't just because I got lucky with one stock that went to the roof. I was very disciplined in breadths of upward momentum, fairly solid stocks. So I'd get it when it would go down, I'd sell it when it would go up. I'd get it when it would go down, and sell it when it would go up.
So once again, we talk about journeys, a struggling actor who's trying to do something on the side to make a couple bucks, looking for an opportunity. That's how you can treat trading. If you want to make it your life's work, that has, there's a spot for that. But once again, this can also be the beauty of I think that's, not sure if that one's it. If I got the right one, let me make sure that's the right one, guys. One sec. Yeah, I'll grab the right link for that. I'll have to grab the right link for that. And I'm going to get you the link for the other one. But understanding how your journey can be doesn't necessarily have to be, uh, you can work your way into it. You can do it part time. Um, you know, you can do it full time. Once again, there's it's from that's off a Tasty Trade. That's the full thing on Louis Porcelino. It's really a 45 minutes of worth watch. And to be honest with you guys, a lot of the journeys in the 80s and 90s, and I've shared this if you've seen the movie Floored, is a lot of the guys that bid and offered, put their hands up, and was good reader of people. A lot of them didn't make the conversion to screen. And once again, I kind of created on both sides of it. I was probably in the first batch of guys that in the early 90s that, computers were a tool that guys started using more. And remember, there were no electronics trading at all at first when I was there. Globex and Access, which is the old NYMEX, just started. But looking at candles and looking at, I went to trading classes at the Merck that they offered, that you paid for, learning how to do point and figure charts and all those type of things. Once again, it's no different for you. It's just honing your craft is the way that I put it. And how your journey ends up going. But I just think it's kind of cool to see people that are famous movie stars and people that were great readers and understanding how to make markets like Louis Porcelino. But once again, financially in the end, from a guy who made, a lot of money, once he had to leave the floor in 2003, I mean, I left right in 2000. I had told my brother, who was a local, that I said, this business is going electronic because I worked in a pit prior. That was electronic, and there was going to be no need for the local because it was just slowing down the process. So, but that journey to you guys, it's going to be different for everybody. But sharing it and having an accountability partner, like that was said earlier, I think is huge. Whether it's somebody that, there's, you guys are in Discord here now, but there's different rooms. If you guys go in metals and currencies, alternative markets, where Top Step daily levels are, there's all these rooms where you can start interacting with other traders and stuff. Use those tools, especially because they're free. But I just wanted to talk about a couple journeys because I think it's important for you guys to know what other traders are going through outside of people that you deal with either in Top Step or Discord, just kind of understanding what they're going through. And I think going forward, what I'm going to start doing, and I haven't ironed out all the kinks, but I want to get a little feedback here. I think instead of covering a specific couple of futures going into next week and quote unquote, let's call it the start of the year, I think what we're going to do is we're going to cover an entire sector for a week so we can track it, chart it, talk about its movement. And like I said, I like the idea of spending, instead of just trying to cram it into, an hour, but trying to watch as a market, especially now that we're into a new year and you guys get to see some other markets, talk about some things that are going on fundamentally. So if anybody's on Top Step TV today, and I know this sounds like, why would I ever trade live cattle? I get it. I'm going to leave my chart out of the equation. And I'm just going to talk I'm going to talk pretty basic here. You're looking at a 3-minute chart. You're looking at a 200-day moving average, 20 and a 50, and you guys know that. So for newbies, we're going to have this conversation a little bit, establishing what the trend is. And this is a short-term trend, right, guys? We're looking at basically the last 7 days right here. Trend is up. Okay? Very simple. So we start looking a little further out. We look at a 30-day. Market's been a big uptrend, had some big red candles pulled back. Still way above the 200, way above the 50, and kind of bumping up against the 20. Okay? So this could say gold, it could say whatever. This is when we talk about, for me, a setup. Now, I will look a little further out. There's a daily chart. I have a big old, in the big dailies, I have a trend line. Once again, market's still in an uptrend. Okay? Now, after today, for you candlestick people, okay, and I'm a candlestick person that looked at too, what is that candle saying right there, potentially? Now, this is, you can see, this is, yearly high. It may not be going back a year and a half contract high, because I was talking to a fundamental guy back in Chicago. Yeah. So this is a market for me to definitely keep an eye on Monday. Could there be some exhaustion? Now, here's, this is a daily chart, right? And let's go back to a 3-minute. And then the other thing that's going to happen more is we're going to have some more conversations, and I said that, and I'm working on the logistics of it next week, is talking more about range bar charts and what I use, okay? So, let's talk about this one a little bit today. Bear with me a minute. Okay. You guys see how this market, obviously this is a 4-range chart. Okay, and you guys know that's what I use. Get rid of that. Okay. So the 4-range chart and that blue line is kind of a mid-band line that I look at, that as we break up, these are areas where I'll look to buy the market. Comes back. Here it gets a little bit further through it. Here it did it again, but here we go as we continue to go up. And we've talked about, as long as I've kind of have the green, and once again, nothing in trading is 100%. There's nothing. You heard Coach Jay and them talk about it before I came to my class today, is that we're just trying to narrow and trying to get A on the right side of the market, and B, trying to maybe catch a piece of a trend. Well, this isn't super usual of cattle to just keep firing today. I'll be very interested to see where open interest potentially shifted. That if this huge move up if open interest is up and this thing closed a little bit higher, it'll be very interesting to see. Okay, but once this market, it's in an uptrend, even though the background changed, I was still looking for an area to buy. And then I'll look at these, and just no different than what Dakota talks about. Old areas of resistance become support, whether they're in a time chart or a price chart. And understand 4 range has nothing to do with time, it's all about price. Hence, like you heard traders, that we come from the floor. We were always concerned more about price than we were time. So I looked to buy in here, and that my risk was basically down here. So I was risking I think $200 to make 400. It rallied a little bit, was late in the day, and I think I scalped, maybe $250 out of it. But looking for these moves in other markets that you trade, is what we'll talk about more. But I think we're going to carry a sector for a week so we can watch it. The other thing that I share in Discord is, you guys hear me talk, this is a technical thing, but we're going to talk about a little bit, and I know more traders have reached out to me a little bit in terms of let's see if I got the one from today. Yeah, this one. So I typically share this from when I get it. And this is more of understanding fundamentally what's going on with right now there's extremely tight supplies with cattle. Okay. You're also walking into a huge cold spell. So these are fundamentals that tend to drive the price higher. Fundamentals, and this is, so I have a contact who I still talk to back in Illinois every couple days, and we'd actually text every day for sure. And we talk a little bit about the cash market and all those things. These are some fundamental things I like to know. But once again, I'm a day trader, so they don't always translate to what we do in the day. But there are things I followed in the past that talk. But once again, a fundamental report, what it looked like 20 years ago, would talk about, where the cattle, what price they're trading in the South, where they're trading in the North, where they're trading in Texas. And I know all this, this is no different than talking about a PMI or a CPI or non-farm this week. It's all relative to the different market. But because technicals have become a big deal, this report starts to talk about technicals, because technicals here, you're talking about rising stochastics at overbought levels warrant some caution for bulls. This was out today. Okay. So hence, the market, and this is what stochastics and RSI tend to create. The problem is, and that was one of the first momentum things I used to use, was RSI and stochastic. I don't love them anymore because I used to watch them hang out forever and then a market would move. I think there's other indicators out there now that just tend to be more reliable and don't get me in as much trouble, because the whole thing in our, basically if RSI is over 80 or if it's below 20 or 10, however you want to set your parameters, that's definitely more of a, to me, and no offense to David Green, because he relies on him and trades very well that way. I just think tends to not always be the greatest sometimes. But however you use those things, and once again, fundamental is part of, kind of what I was traded and what I did. So I use that as part of it, and it's not for everybody. But it's a lot of people reach out to me about what I think the dollar is going to do next year. It's important till it's not, but it's something, we've also talked about. And I started talking, Coach Paul and I talked about this bad boy way before this market decided to make, besides gold, Bitcoin. I mean, so if you're looking for a side to trade this market, and we had talked about this probably, I don't know, guys, a couple months ago. It's a 500 tick, but if we go to the daily, when she crossed the 200, this thing exploded, into the election, had a pullback, came down to the 50-day, held, and now it's bounced. But once again, as day traders and and I've done this more as a swing trade, and let's see, we can't swing trade, but as more of a slow market trade, the 500 tick has been very respectful of certain price action. So Anne Marie and I talked about this. We had kind of got back and forth, and we both kind of, this could say whatever on it. It could not say Bitcoin. But once again, this is where kind of going through different markets and looking for opportunities, and micros allows you that. So that's one I think you got to keep. Let's see. Good old. There's another one. There's a micro contract of it. Who would have liked to taken a short natural gas on some micros up around that 200 day? Just if you were up, yeah, no heat, very little risk. So there's opportunities in markets out there. The other thing, because the cold weather creates a lot of volatility, and this is, I'm not trying to predict what's going to happen here coming into 2025, but I've been kind of beating the drum all week, and we'll see if all the big players are back next week and the market gets more liquidity and tends to calm down. I think wider stops and sizing down is going to be my strategy for the first another week here, because I think these markets of last year, especially in equities, of straight up trendy moves. The market's moved up 23% last year, and it was up almost the same thing the year before. There's going to be more volatility this year. That's a prediction of me, and I don't think if you listen to analysts, that we're going to see more volatility, and that's great. We want more volatility as traders. The problem is you're going to have to get wider, and you're going to have to size down. So that's just, I'm beating my drum on that one right now, because I still think, and this week might have been that way just because a lot of people were still out of town for New Year's and all this other stuff. But I think keeping your eye on that, and when you hear a little bit more about Louis Borsellino's story and talk a little bit more about dynamic of the pit and talking about some things, I think it'll be a little bit easier for you to also understand of the best traders, and Hogue said it in lunch, the lunch pail trading is talked about it is the best traders are the ones that can identify when market state changes. So they adapt to the change in the market. Okay. So, and it can be fundamentally driven, it can be technically, but I just, and once again, guys, I think, you know, Mr. No Luck and guys like Dan who have who have a lot of screen time in, you've just, when you start to see things that you've seen for, you know, I've been on the screen since, I mean, I had a screen when I was back in Chicago in the pits in 98. So, I mean, truly on the screens was 99. So 25 years of, you know, that was before you could enter. I mean, you couldn't, you know, the dome just started back then, you know, ladders where you could enter an order. If not, you still had to call the order and wait from a fill back from a broker. When I first started brokering, you couldn't enter an order in on any dom. You had to call the desk and place an order. But identifying that market state and seeing these things change. And once again, you know, there could be some rotation in the markets this year. You know, that's why I look at a lot of different things like Russell and Dow, and just kind of trying to see where the good, you know, the good opportunities are. So I think that's kind of me beating a drum going into 2025. So I'll have kind of a new itinerary coming into next week, and we might actually, I think if we're going to do a sector, I might go to, because VIP's wrapping up here, I might go to 5 days a week so we can dig in a little bit more. Maybe use, if we cover a sector each week, is talk maybe technicals 3 of the days and maybe talk fundamental 2. So I'm kind of trying to iron the logistics out of it, but I'll kind of roll it out on Monday. So, any other, I mean, I got the Borsellino story. Anything else that, you know, here's another one. I think I shared this. This is shared in my, this thing just will not share today. Have you seen that before? I believe let me double make sure. I posted this in my Discord room. I think I might have shared that with the VIP guys. Yeah, and if you guys want to see my trade reports too, I posted them in my Discord. The learning zone. I'll post this in my coach's room. Take a look at that over the weekend and give me your 2 cents if you haven't seen that before. All right, I'll post that in my. It's a very interesting look to seeing, understanding where you're learning, where your growth is. Soak that in over the weekend, and on Monday's class, we'll talk more about this. But I'll, if you want to take a screenshot, but I'll post it in my. I'll do it right now. And I am also going to talk more by covering something for the week. I'm also going to talk a little bit more about the seasonality portion of trading too. I think I shared this. Get rid of that one. and we're going to track these. I'm working on coming up with a spreadsheet for it. I think we talked a little bit about the seasonals walking into January. And kind of tracking these more. Just some ones to, once again, this is kind of similar to a little bit of what Edgeville does. If you're familiar with them doing a bunch of back testing, this has been seasonalities. These things have been around since I was on the floor. And it's just doing back testing of periods of time over 15 years of basically if you entered here and you exited here, just your, like here. Let's talk about buying April gold 1-8, which would be next week. That trade to be held for, and once again, these are more swing trades, but it gives you an idea of seasonality of typically where the market leans towards. And you might be in the 1 year, and we've talked about this, where in 13 out of 15, you're in the bad year. But once again, if I know I'm walking into a seasonal, and once again, seasonals to me have a little more legs to them in markets outside a little bit of the indices, because the indices always kind of have a natural bid to them. But seasonalities, especially in the energies, I also kind of think it's interesting that there's a seasonal that kicks in on the S&P and the Dow at the end of the month, which means where do we go for the 3 weeks prior? Are we rallying or are we breaking into this? So once again, it's just seasonals. I think they're more for swing traders, but I still think that when you're in a seasonal, just kind of being aware of it and understanding a little bit of it, what's going on is kind of important. So, all right. Sounds good. Everyone have a great weekend, and then we'll get back at it on Monday, and we'll get it from there. Dan, I would think that is going to be a legitimate possibility as you become a live trader of a valid discussion you should be able to have with Nick or the risk team, that you see some swing trades, you have the money to cover marginally the position, that I don't think that that should not be that should be should definitely be something for discussion. So all right, guys, sounds good. Everybody have a great weekend, and we'll get back at it on Monday.